It has been a long time coming, but we're expecting to hear today that pay is back to levels last seen before the financial crisis.
So Steph's looking at whether we are actually feeling the benefit after 7 years. Morning.
Morning to you both. Yeah, we're talking about pay increases and how pay has been increasing and that going back to being back before the financial crisis. So there's still a lot of catching up to do on about it. Morning everyone. Yeah, this is about what we call the real wages. That's when you take into account how much the cost of living has changed too. For a long time, pay wasn't going up as fast as inflation. So for many, it felt like a pay cut because our money just wasn't going as far, and that is now changing. Average weekly pay rose by more than 2% in the 3 months to March compared with a year earlier. Today, analysts are predicting the latest stats, which includes up to April, will show that average weekly pay has gone up around 2.6%. And you can see there as well, that's the change with the inflation figure, which we got yesterday, just showing that inflation has gone up again. Well, with me now is Dr. John Ashcroft, who is an economist, likes to be known as the Saturday Economist. Morning to you, John. So just explain to us the context of this at the moment in terms of wages, because it sounds great that the growth rate is back where it is going to be back where it was before the financial crisis, but it doesn't mean that things are all good again with wages, does it? Because there's a lot of catching up to do.
Well, as you say, there's a lot of catching up to do. It's been helped by the fact inflation is low. Yesterday we saw the inflation figures at 0.1%, which is very, very low. And that helps any wage increase that we see in the economy. Overall, as you're saying, we've seen an increase last month of just over 2%. It's going to rise again with the figures we'll see today. So with earnings rising at 2.5% overall, that means people are better off, but it's a modest increase. So if you're on an average wage, you're going to see like a 5 to 10 quid increase in the packet every week. That gets soon wiped away by different things.
So people aren't necessarily going to feel it, because that's the problem with these average numbers, isn't it? We're meant to all feel better, but actually it doesn't necessarily mean we will.
No, but in certain sectors we're seeing great pressure on earnings because the economy is growing, jobs are increasing, recruitment difficulties are increasing as well. So in certain sectors like construction, wages actually grew by 6% last month. So certain sectors, certain leisure sectors, seeing strong growth as well. So depending on which sector you're in, you can see better wage growth. But nevertheless, it's still difficult. By the time people really feel well off, that's the time we start worrying about the end of the cycle. So it's a tough ride.
Yeah, and why do we start worrying about it then?
Because interest rates are set to rise. At the moment, generally we think inflation is going to be around 1% by the end of the year, rising to 2% by the MPC, the Bank of England target, by the middle of next year. But then people are really going to start to think about when base rates are going to rise.
And with that, because when we talk about people feeling better off, things like the oil price helped, didn't it? And people could tangibly feel that petrol prices have come down. They could see the extra tenner from filling up. But that's been ticking up again. So in terms of where people might be feeling the benefits, what do you think they are at the moment?
Well, as you say, the oil price was an incredible kicker to deflation at the end in the final quarter of last year. So it was averaging $100 a barrel. Brent crude basis, as we call it, and that fell towards $40 by the end of the 2014. Now that is not going to last. We were calling it back to around $65 this quarter, which has happened, and we'll see a return towards $85, $90 by the end of the year. So by the final quarter of the year, that oil price shock, which assisted petrol prices and airline prices specifically, that's going to work its way out of the economy. So even if we don't see any dramatic increase in oil prices above where it has been, it still means that inflation impact or the deflation impact will work its way out.
So briefly, your prediction of when we'll feel better off, do you reckon?
Yeah, 2020N. 2017.
Right, that's quite a few years, yes.
Yeah.
OK, thanks very much, and that's it for me for now.